Hey everyone, DayTraderRockStar here with you, and for a market update going into Thursday, September 8th. What a week we've had. We had a shortened week, Labor Day. We came into this week expecting a lot of volatility leading up into all this news, all these events, the German vote, the Obama job speech, economy speech that we're going to get tomorrow. Bernanke will also be speaking. We'll also have jobless claims. And it's just been a wild ride. And you can actually take a look at the S&P chart here. And this is going to be a great video. Just let me stop right now and just say, hey, there's no doubt about it. The techniques that you're going to see tonight on this video are just, techniques that I use in the market each and every day. And today was a great day because we really took a lot of scalps. And today was a lot of different type of setups. So I really wanted to put this video out to really show you the different type of setups you can find in the market each day and some of the best patterns to trade off of. And again, we did a lot of scalps in the room today. We did took some profits into earnings. So there was a lot of everything that happened. So I'm going to pretty much do a review of the week, but pretty much today because, going into tomorrow, we're going to take all bets are off the table just because anything can happen with these speeches. And, let's just start off here with the S&P and what we're looking at here. And I already put in the 1, 2, 3 pattern. You know that on the radio station. And again, for those out there maybe just seeing this for the first time, I'm DayTraderRockStar, and I host a daily stock market broadcast where I broadcast the markets each and every day, live trading, live commentary, tick for tick, tick by tick, and we focus on every aspect of technical analysis that we can in the markets. And over time, we've really developed a very powerful methodology which takes the risk out of trading. And doing that, and one of these techniques I use is called the 1, 2, 3 method. And it's basically what I use to predict chart patterns. And when I mean predict chart patterns, just line up a trade before a trade happens. So you're already going to know where the market's going to go just based on 3 pivot areas in the market. And again, this is a core, pivot area. And again, I go over this stuff in a lot of my videos. There's plenty of videos out there. But the pivot area is basically an area where you move in one direction and you pivot to another direction. So this could be considered a pivot, but because of this double bottom here, we're going to use this as a pivot, and we're going to use this as a pivot. It's really the 2 pivots on one main side is really the important thing. And then you take the 2 pivots, and you pretty much connect them. So that gives you 2 points, as the rule of geometry states, you need 2 points to make a line. So those 2 points, you just draw the trend line to the tip of the pivot area, and you have one line. And then you take your number 3, or your third pivot, which in this case 2, and you draw a parallel trend line. I mean a parallel distance, equal distance along the whole length of the thing. And you could see right off the bat that this is we already did this back in the day, but you could see how the market moved right up to this level. Now this is after the fact, but this was actually before the fact when we recognized this pattern and knew that the market was going to actually probably has a good shot of actually running into this area, and that would be a classic example to sell. That would be a high probability sell area based on the multiple indicators. First indicator, the stochastics overbought. Second indicator, upward trend line. Third indicator, a recognizable pattern, which is a channel. Even the 50-period moving average is an indicator. So this is a very high reliable 4 out of 5 indicator setup to the downside, and we got that fast push down. Now what makes this so interesting, even with that, we had all that news out there, we still just happen to come right down to an area where, again, there's an established trend line. Now we have this spike down to around that 1103 area back here in July, and then we came back and kind of made a double bottom. We didn't really spike down and just bounced off, but these 2 areas right here, we take that line and move it to those the lows of those days. You extend that out, and you can see that we had that gap down on Tuesday, brought us right to that trend line, and we bounced off of it. And looking at the 60-minute chart is even better because the 60-minute chart, we zoom out, and again I use the 6-minute chart a lot in my studies, and again you can see where that spike down was right here. all right? And from that point on, I just draw that trend line, and I connect the lows there, and you can see the market came right down to this level, gap down. The oversold stochastics on the 60-minute chart, which is a very powerful chart, and everything lined up for that move up here. Now the stochastics are embedded, and there's the possibility of more upside here. Believe it or not, you have the 1, 2, 3 patterns. I never even took this in consideration, but if you took this, and looking back at this, and this is why it's so important to constantly, work the markets. That's why I like to be the eye in the sky for you traders out there. We could point these places out. And again, this is after the fact, but I never really did put the 1, 2, 3 pattern on here. Say you had these 3 areas here, and you started getting this bounce, and you got that recognizable bounce. You could probably just take this pivot area and draw a parallel line. There it is. And you can see that we actually came right up to that parallel line before we started moving back down. Again, we gapped down to this level over stochastics. So everything really working together now. This was 4, this is 5, now right in the middle. So very impressive patterns playing out in the market right now, and that's exactly what we want to see. We want to see patterns. We want to see, what I call a stock or the index patterning out. All right, so that's where we leave off today, going into this big quote speech. And if you've seen my latest video on this and how nerve-wracking and how frustration it is to be a trader and not feel comfortable with your financial structure in the markets that you trade. It's like it's either you are betting against the markets or you're betting for the markets. And betting against the markets is basically betting against the country in this case, because you're feeling like everything could fall apart here. But that's okay. I mean, we're still going to make that money. But again, this all comes down to possibly a more significant move in the next couple of days with Bernanke speaking and Obama. So with the trades that we've done today and some of the entries and some of the holds right now, I think we're in good position either way. Let's go over some of the trades from today and I'll review the 10 for 1,000 watch list. Now the watch list goes out every week to members of the site. There's a members area of the site which has a great chat room, and we have a newsletter that goes out outlining the potential setups and at least 10 stocks going into that week. That's why it's 10 for 1,000. And these are based off of high probability setups on the methodology. This is the 5 indicator setup. So if we see this goes out in the on the watch list saying, all right, here's a trend line thing, and we'll go over some of those stocks too. I'm just rushing through this video because I want to get a good night's sleep tonight to get up early tomorrow and get back in the market. So we're going to start off on a couple stocks, and we knew that we had some nice action in Yahoo today. So we did take a scalp in Yahoo, and I just want to go back and show you why I took that scalp in Yahoo. And it was basically just based on the double bottom here. It was a multiple indicator setup based on both the stochastics setting up and that recent low, and then the double bottom, but also the 50-period moving average. So you had multiple indicators. You had oversold stochastics, double bottom, which is I call a chart pattern, and the 50-period moving average, which was an EMA indicator. And that was the reason we got in on that. We got in at 1348, and from that point on, it moved up to 1371. We took it off right around 1370. And it pulled back, and it's still in play. And this one definitely can move higher, but this was a good example of what we look for on an intraday 5-minute chart for a scalp. Again, you have all day to trade. It's important to develop that discipline and that patience to let the setups come to you. Not just guessing on that one pullback. It's really hard, other than you do have this stochastic pullback showing you, hey, nice oversold levels here. So you did get that bounce, but back here, when you see that pullback on the stochastics again and the 50-period moving average, it's a good risk-reward trade right here. Because if you drop out, you take your stop. You could stop out. But if you hold this, you got a great trade on. So this worked out really well. And that's a great example of a double bottom multiple indicator setup on a 5-minute chart. Now, Fastenal, FAST, we added to that one today. That's a great stock going forward. You can see the great level. Actually, just looking back at the 5-minute chart, you can see how the stochastics pulled back early morning yesterday. And then let's see. Well, actually, yeah, early morning. What is today? Yeah, today. Yesterday, you're going to get this maybe tonight or tomorrow. But yeah, we had the gap up, and then we had a nice pullback to the multiple moving averages. But the stochastics and the key moving average here was just textbook. And even you could probably even go out to this 2 pivot areas and see that there's an underlying trend line pretty much holding up here. So this is a multiple area to get on here, and these are great scalps during the day because they're in the pullback phase in a bullish trending bias uptrending market. So it's always a good trade off of here, especially with the stochastics are set up. Now, the reason I'm really showing you the Fastenal is because we added to it today, and the daily chart. When you look at the daily chart, it's very sloppy. It's very sloppy, and you're like, wow, this is, what am I supposed to see out of this? It's up, down, it seems very volatile and stuff. And yeah, you can definitely see the remnants of a trend line here and a breakthrough and a pullback to the trend line. All right, stochastics are kind of negative, pulling back, but again, the volatility is very strong. And that's when you want to, explore other time frames. And we go on that 60-minute chart. And here's the 60-minute chart now. All of a sudden, this thing is coming clear as day. First of all, you have a very established trend line. So once you broke through that, the trend was definitely changed. And before that even happened, the reason we actually got back into this one was a double bottom on this. So we got in on a double bottom. It bounced up, and then all of a sudden, what we started to see is, looking back at, and this is how I chart these things out, we do see. Actually, this is a line I wanted to show you. This is a secondary trend line, and what I mean is you take different pivot areas. You can see how this stock actually reacts to each primary primary trend line and secondary trend line. Primary and secondary trend lines. Primary has more touches. Secondary has the next set of touches. So you do have a spot here, a spot here, and a spot here that you touch. So this is considered a trend line. I'd put it up there and keep an eye on it, and you can actually see the market react to it each 3 times. So you need to extend that, and if you did extend that and also traded the, now you have that 1, 2, 3 pattern. 1, 2, 3. You could draw that parallel line. Remember, it takes three pivots to make that chart. So here's your 3 pivots. And it can work on the upside or both on the downside. This is what's so special about this. So you have the two lines, and you have the one line here, draw a parallel line, and here's your target. So when we sent this out on the 10 for 1,000 watch list, I said watch for the gap down on Tuesday. And the gap down corresponded itself right to that one pivot. That X marks the spot, I call it. It's the treasure thing. But everything came into play here. First of all, you had the 1, 2, 3 pattern, meaning you have 1, 2, 3, you trade 4. 1, 2, 3, and here's 4, you trade it. Here's 5, you trade it. And from that, and that's what we could, or 5 could be down here. It really, starts to play out really well because this trend line now is really established and things look good. So Fastenal, upward trend, probably got to get a nice move back up towards the top of the trend line. You can see we're overbought, so you have to have a little caution. And again, going into the markets tomorrow, Fastenal is kind of a industrial stock because they're the leading fasteners, bolts, screws. I think they're screws, but Fastenal, it's a quality company. And if there is something on the table for jobs and they try to push the infrastructure jobs, Fastenal is going to benefit from it. So we got that going for us too. So this is a great trade going forward. Love the trade going forward. You can see how important that 60-minute chart is. And this is something I explain each and every day live on the radio as it's happening. So it's really that one-on-one interaction. VeriSign was another trade we took today, and that was a fast scalp. This one came out with rumors yesterday of bowing out of a conference, and usually that happens when their stock is about to be taken. There's some kind of M&A activity on the horizon. They don't need to go to these conferences or whatever, and it's always usually a rumor, and nothing usually comes of it. But in this case, we have the 2-day rally, and we just jumped in on it and got a few pennies off of it. Excuse me. So a little more than a few pennies. You know, what we try to do in the scalp is, I depending on the stock, the size of stock, the type of action, I usually look, depending on the size, between 30 and 40 cents on my scalps. And so I think we got close to that on this. And another thing, tip of the trade, don't be locked into your target. Say, I need 30 cents or else and you might have 20 cents, and all of a sudden the market feels a little different, but you want to get that extra 10 cents. You're hanging around, next thing you're giving it back. If you have a good profit, it doesn't matter if you take $100 or $80 out of the stock. $100 sounds good, and you might be that type of personality that you need to take $100 here, $100 bills each time. But the truth is, $80, $70, $60, $50, they add up, as long as you have the discipline and the patience. The setups, that's not a problem. I'll bring you those. It's getting to the discipline. That's a self journey that you have to take care of. All right, NXPI. Why did we get into NXPI today? NXPI burnt us in the past because, for me, believing in the technology, you can never believe in technology. Technology will take time to catch on. This is near frequency chips, and NXPI is the patent holder for the technology. But the daily chart really got me interested, because what we have here is a great positive stochastic divergence. So it's a pullback on the stochastics back down, an aggressive pullback versus a sideways consolidation in the market. So this is what I call positive stochastic divergence, and it's another technique that I use. I have techniques are just what you want to have. These are your tools in the market. This is your bullets. All right, I can't get in there with a gun. Let me pull out the mortar. Maybe this one's not a stochastic divergence trade. Maybe this is a relative weak or relative strength trade. All right, maybe maybe we're taking a breakout trade. Maybe we're taking a falling wedge trade. Inverted head and shoulders trade. Each one of these is a little different trades, but this is a great reliable trade. So if I happen to notice a nice pullback on the stochastics, yet sideways consolidation, we're not losing it. We're going to look for that pop up. So we got into it. It's just beginning. Volume's picking up. Stochastics are getting a nice crossover. Am I seeing that Nike check mark here? Another trick of the trade, if you start to see an aggressive spike up, a Nike check mark usually represents a follow-through trade the next day. Now that's through my own studies and stuff, through years and years in the market. But that aggressive check, this looks great for a follow-through tomorrow. Again, what's really weird about it is that we have this big Bernanke speech tomorrow morning, and then at the end of the day we have Obama's speech at 7 o'clock after the market closes. So there's going to be continued, spotlight on that. They're going to be just rolling through the guests tomorrow on CNBC in your local squawk box, and so there's going to be some volatility, and there might be some selling before the president comes on. There might be selling into this, because maybe this is considered this beautiful rally we had over the last couple of days. Maybe this is the Obama pre-rally. We actually rallied off the lower trend line here around 11:45 and closed out around 12. So we were 55 points over the last 2 days. That's what we're looking for. We're looking for the Obama rally, and this is it. So tomorrow, take it's a great setup. And again, here's another 1, 2, 3 pattern. Remember, you have 1, 2, 3 parallel line, boom, shakalaka, boom. So breakout here, I could see this market moving right back up here into the 1200s if everything works out. But again, that's to be seen. We have news that's dominating the headlines, and that's. It doesn't matter if you're right or wrong. If the news is not there, the news gives you that volume, and that volume kind of takes you out of your trade or takes you out of your pattern. You have to really let things settle back in. All right. SOA. great inverted head and shoulders. This is a great example of a pattern that's in a nice channel, but all of a sudden the market crashes on debt fears in Europe, the euro fears, the Greek fears, and the market just sells off. All these patterns got destroyed. This is what we call pattern breakdown. The pattern breaks down, and you want to see the pattern break down. If it's going to break down, you want to see it go down on outside news, not something technical in the markets, but this is what I would consider kind of outside news, kind of affect, the overhanging issues of the Eurozone and some other issues. But this was all these news items coming together, and then we started basing out. Now we have an inverted head and shoulders pattern, everything actually looking good. But what we have here also is, once you drop out of a pattern, that pattern is considered broken. You have to wait for that stock to give you that risk reward trade again. You would love to be able to say let it pattern out again. I call it patterning out, and give me something to work with. So now we still have our original pivots. So we have some pivots. We have a pivot here, and you get used to looking at this stuff. Sometimes you might see it and you just might not see it, but over time you start to get it. Just take the extension of the pivots, take that line, draw it through here, and just experiment. Experiment with the market, and see what works. Sometimes some pivots work, sometimes some pivots don't work. But we're starting to see this type of channel line. But you see how I just put that to the closing line there? What you want to see whenever you have a spike down or a major spike down, extend that trend line to the major spike down, and most likely you're going to see that channel form. So right here, all of a sudden, we'll probably put this right out to this pivot area. You can see there's a nice recognizable channel developing just based on a few pivot areas and that extension shadow there on that candlestick. So for whatever reason, and this is a downward channel, we look for the break up to the upside. We have other patterns working out. Everything looks interesting. But for some reason, all hell breaks loose in the markets. There's some bad news, and these stocks fail, and we get out of them. We at least know that we could track them. I know that down the road, if it's ever back down at this level, I'm going to nail it just like I nailed it the last time. That's because that stock now is in a pattern, and we just need to have our patience and discipline and have a good rotation of stocks. SKX, we got into this one yesterday, took it off today, beautiful scalp, got 60-something cents on it. It still looks great, so I'm going to focus on this one tomorrow in the markets. Like to get back into it. I could see this one moving up another $1. Easy dollar move on this one. Easy dollar. So I do want to get back into Skechers. We had a great scalp on that, overnight scalp actually, overnight hold. The TBT, short treasuries, this was a great little, and again, another great feature about the site, the members area, is a great members room. We have so many great traders who bring great ideas. This is actually brought to me by a member named Money Changer. And, he was a guest on the show, and he made a good argument of why sometimes the most obvious things are not the most obvious things. Like the treasuries were all this issue, all these, money's finding safety in treasuries. That's why there's treasuries they're considered a bubble in treasuries. Same thing with the gold. Everyone's expecting, gold to go up. And it's hard not to believe that. But then you have to, slap yourself and say, oh my God, I just fell into that herd mentality. Everyone thinks that gold's going up. Everyone thinks that, treasuries are the secure place. That makes me think now, like maybe again, I'm being sucked into that mass mind control. And so we took the trade. I took the trade on the pro short shares of the treasuries, and it worked out great. And now all of a sudden we have a technical term, which you don't see that much. And because I never traded a TBT before, and we do have a rebalancing effect on this stock. So it almost trades like an ADR. But what we do have here is an island reversal bar, meaning we have a gap down and a gap up. And this really looks interesting. We'll see what happens again. We have all kinds of news. The market's going to get some fear going into it again. This is probably going to head back down. But this is a very interesting trade. and I think we're going to take profits in it tomorrow at one point. Maybe not. Maybe we'll hold on to it. So another great trade today. And again, these are just trades that we take live. Well, this one wasn't a trade that I actually took, but we actually just pointed it out. And it was what I call a relative weakness trade, relative strength, relative weakness trade. And the 5-minute chart, again, this one brought to me also in the room. Let's see, let me get this candlestick out of the way. All right, so the market had a very bullish day today, and Pepsi was selling off. And when I was alerted to it, it was right about here. And it was sideways consolidation around 2 o'clock, and I was like, "Wow, this is a perfect short setup." Why is this a perfect short setup? Well, because the markets were making highs, and it was coming into 3 o'clock. I think it was right around here. It was coming into 3 o'clock, and we knew the market probably was going to give us, it's going to give the old college try to break down once, around 3 o'clock. Just sometimes that happens. And but we knew Pepsi, the market was making new highs. Pepsi was still just grinding out, showing no strength whatsoever. So we knew any pullback in the market would dip this over. And this is exactly what happened. So this is what we call a relative weakness trade. And I'm just going to lay the overlay on there. And this is, and relative weakness and relative strength, it's just basically taking the underlying market, which I'm going to put in red here. All right. So you put the underlying market, and if this is the underlying market going out at the, from the open, we opened up, we gapped up, and we kind of grinded all the way up on the S&P, and as Pepsi continued, sold off early morning, then consolidated. So you see that we had this divergence. You see the market going up here, and you see Pepsi going sideways. So right when we figured that the market was going to give it the old college try pullback, this is where Pepsi lost it and dropped out. And it's a trade. It's not you're not marrying the stock in no sense. You're establishing relative weakness. You're seeing how the market is going to give it the 1-2 try, and you take profits when profits are due, and you move on. And that's a great example of relative weak trade. And the opposite for relative strength. The market is selling off. There's a stock pushing up against its highs. When the market bounces, that stock's usually the first one to move. So I'm not even going to go over. The 10,000 watch list was a Rockstar list this week. I was going to go over that too, but I felt I used up most of your attention spans right now. I hope you enjoyed that video. I think this is a great educational video, and I'm going to leave you with that. I appreciate it. I'm DayTraderRockStar from Day Trader Radio, and I'm signing off. See you guys in the market tomorrow.